Happy Friday, traders. It's 8:02 a.m. on Friday. Hang on, I'm getting some feedback. 1 second. Sorry. Test, test, test. All right. Okay. So it's 8:02 a.m. on Friday, the 10th of May, 2019. Happy Friday, everyone. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. A lot happening overnight as a result of this drama that is going on with the trade talks. The Nasdaq's off 45 points. It's the laggard this morning, down 0.6%. The S&P is trading right against the mid of yesterday at 56.57, down about 16 points or 0.5%. The leader today is the DAX, up 98 points or 0.82%. The Euro stocks as well, up 20 points or 0.6%. Gold, treasury bonds, notes, pound, and yen are all up. The market has a mixed sentiment right now. Allocation is to both sides. Really, we're seeing flows into risk in Europe and flows out of risk in the United States. A lot of news flow overnight. I mean, holy cow! There's just a ton. But the bottom line really is that the U.S. Did pull the trigger on implementing additional tariffs on $200 billion of China's goods at midnight last night. Trade talks continue today. So at some point, I'm suspecting at some point we're going to see a rip up as that gets announced. Clearly, there's still work to be done there. President Trump stated that he had received a letter from China President Xi and planned to speak with Chinese leader by phone as trade talks continued. So anyway, as I said yesterday, it's in the best interest of both countries to figure this out. There were several tweets from POTUS stating that he's happy to take in the extra revenue, billions and billions of dollars. Unfortunately, we pay that as Americans. So I don't think anybody wants this to continue. So the expectation, in other words, is that news is likely to come out that would refute that and set things in motion for an agreement. As far as what we're looking forward to in terms of releases this morning, we did get a lot. There was a ton that came across from the UK and Germany. Balance of trade, industrial production, GDP, construction output from the UK, Canada as well, employment, and so on. And in the U.S., we got core inflation year on year came in at 2%, in line, well, slightly lighter than expected at 2.1%. The inflation, that's core inflation, the inflation rate came in at 1.9 versus 2.1 expected. And then there's Fed Speaker Brainard, who's talking right now. We get Fed's Bostic. We just started, and Fed's Williams at 10 Eastern. And then at 2 p.m., we get the U.S. monthly budget statement, which is a low-tier figure. So that's how things are shaping up. Not expecting a huge interruption to the auction on scheduled releases, expecting them on unannounced tweets and stuff that comes out due to the trade talks. So yesterday, the expectation was we were gapping down. We were opening in a gap down. The expectation was for a response back into the prior day at some point. The primary scenario was looking for a push down below the overnight low, and then a reversion back, responsive buying back into the prior day's range. As you can see here, I was expecting a push into the prior low in that stock zone there at 28.73 or so. And then from there, I drew this line to represent who the hell knows, or who the heck knows what might happen. It might race up on good news and might drop and fill the gap zone on bad news. So here's what we actually got. We did get, well, I can't show it to you on a 2-tick Renko because there's too much activity for that bar type. But very simply, we pushed down. We did push through the overnight low, but we pushed way down. We pushed through the gap. We pushed through the gap zone from the 1st of April. We pushed past it, and we pushed right into April 1st's range, and or the last day of March's range. And then we pushed back up. And where do we end up? We end up at that 73. The market tried multiple times to get into and hold on to the prior range, to Wednesday's range, and couldn't do so. It kept testing and retesting. We did poke through the IB low in what looks like a failed auction, and then we pushed through the IB high, giving us a neutral day. By the time the market closed, we have a neutral extreme up. That's the day type neutral extreme up. The market tested below and finished near highs the other way. And so what we had yesterday as we left at the end of the day, what we had is a very bullish turn. It looked to me like the market is very likely to continue higher overnight. This is what's called a neutral extreme up close, and it's very bullish, especially on a downtrend. We've been in a downtrend. We've got lower highs. We've been getting lower highs, so we're one time framing down. Sellers are in control of the daily auction, and here we are finishing on neutral extreme up. This is bullish. Okay, this is likely to be bullish. So that's how we finished up yesterday. So we ended up with pretty much almost exactly the primary scenario 1, except that scenario 1 was expecting the selling to finish somewhere in the 28.50 area, and this thing dipped all the way down to 38.25. A lot of news, or a lot of news-based action yesterday. I'll show you that on the heat map. Here we go. So this is tonight, but let's go back to yesterday. A lot of action. Scroll. Tons and tons of action. But when we look at the action yesterday, it really is just very violently back and forth. So here's the this is the open of yesterday right here. That's Chicago time. CVD's at 0, and then you could see that we had this strong impulse up when POTUS announced that he has an idea on how to work out this trade deal. The market rips up, and then immediately after, the executive branch of the U.S. government released a statement saying that they have prepared the tariffs to take effect at midnight. The market responded and stayed strong, but as the day goes on, we get these news events throughout. We get these news events that take place throughout the day. We finish up with a pretty strong close, and then as the overnight session starts, the Asian session starts. Here's the news, some news, and so on. It is quite whippy and quite aggressive. More news. These spikes and flushes are just market expectations for something, and it's being pushed around with by our news feed. There's more news right there. Okay, pretty ugly, pretty tough trade, I'd say, and you just need to be cautious trading this today. The order book right now looks pretty even, slightly heavier on the sell side. The offers are a little bit heavier up top into that 2864 area. But overall, I think the market is really jittery and is awaiting important news. Here's the overnight session. Overnight volume 581,000 at this point. Very, very heavy overnight volume. Yesterday's volume was about double the norm for the pit session, but the overnight volume was very heavy. Again, a lot of it happening. Remember, the Asian session, the market, if the U.S. session finishes here, the ES during the Asian session generally does a quick test down or up and then holds steady until about 1 o'clock Chicago time, at which point we get the European session and then we get whatever movement. And so we end up generally, for those of you who have been following for a while, have seen me point out that the Asian session was quite dead. And you could see here that that's not the case. Lots of big wicks on this 15-minute bar chart all over the place. I would say today is not a good day to hang tight and be stubborn and so on. It really isn't. It's not going to pay you to fight this market. It's not. So if you're wrong, make it quick. Make your errors kind of go away very quickly, and move on to the next trade. There's a significant amount of risk being introduced to the markets today. Why is this not going away? 1 second. That's kind of odd. There's a significant risk to the markets to trading today with this news event. The Chinese have to get these tariffs off or impose their own. And so we can expect more and more difficult news as the day moves on. One thing's for sure, we're expecting quite a bit of volatility. So this volatility is likely to continue. So let's take a look at what we expect for today. But first, it is like Friday. Don't forget to hit the like button before you leave today. Please do me the favor of doing that. It makes it easier for folks to find this broadcast. I'm doing the best I can for traders to help you kind of organize your day in order to have the best chance possible at fulfilling whatever goal you have. Here's where we are currently. We're trading against the overnight point of control. Again, let me bring that back up. What is going on here? The profile overnight, I've got like layers and layers of profiles, it looks like. The profile overnight is the point of control is right down here. We're trading right on top of it. The profile overnight is fairly even balanced. It's got some protruding portions, but it's got an excess high and it's got a weakish low as we stand. And so what am I expecting for today on the primary scenario? So as we see where we are, remember the point of control is right in here, the low is right beneath us. This thing can go in either direction, so it's really a coin toss in terms of which scenario is likely to go in which way. But overall, expecting an open auction on the open, I'm expecting everybody to be sitting around waiting to see. But on the first scenario, I'm looking for it to drift down. It may drift and take out the overnight low before it impulses, or it may impulse before that. Not sure. But I expect it to take back this 28.77 at some point today, and then get us back into 28.83, and then to start working its way towards 2,900. There's a fair amount of information that leads me to believe that the market is likely to have found a bottom for now, a low for now. We see this in the options market. We see quite a bit of put selling activity and so on, which is fairly bullish, given the volume that's taking place. The secondary open auction that drifts up, pushes towards that high, drifts into the 28.75 area or so, impulses down, comes back into the middle of the range, and then starts moving, which is responsive, moving down towards 28.44, 45 to balance out. I'm expecting that selling will likely end up in an inside day. I'm not expecting this low to be taken without significant news. And the market seems to have priced in bad news, and it seems to have responded pretty well. Now remember, the overnight session has made higher highs and higher lows. Those two blue lines you see there are the overnight high, overnight low, despite the fact that these trade tariffs have taken place. So the market's taken this news pretty well, really. And so the downside, I think, is a little bit capped unless something dramatic comes out. And unfortunately, this current administration has a flair for the dramatic. Not a shot at Trump or anybody, but those are the facts, and we deal in facts when we trade. So that's where we stand. Hopefully, you've got your risk under control. If you're not trading a big account, please go trade the micros instead. Keep your risk in control. We want you to be here tomorrow. If you're not here tomorrow, game over. So your primary task is survival. Your secondary task is making money. And we make money by following our plan, not by looking at our P&L and trading according to our P&L, because the market couldn't give you know what about your P&L. It's, are you in alignment with the ebb and flow of prices and volume, or are you not? That's what matters. It's not your P&L. If your P&L is on the screen, then you're being an amateur, and you probably should get rid of it. Okay? Good luck today, and I'll catch you Monday morning. Take care.